Hey there, and welcome. If you've ever opened up the GSTR-1 dashboard and just felt your head start to spin a little, you've definitely come to the right place. Today, we're going to take that complicated-looking form and break it down into a simple, straightforward tool that you can actually use for your business.
I mean, let's be honest. The first time you see it, it's just a wall of tables and numbers, right? It's so easy to get lost wondering, okay, where on earth does this invoice go? It's a super common feeling, so don't worry.
But the good news is, there's a logic to this madness. And in this explainer, we're going to walk through it table by table with some really practical examples so you can get your returns filed with total confidence.
So here's the game plan. We'll start by sorting out your main everyday sales. Then we'll look at the special cases, like exports, figure out how to handle returns and advance payments, and finally, we'll see how it all comes together in the final summary.
Okay, let's kick things off with the most fundamental question you need to answer for pretty much every single sale you make. It all boils down to one simple thing.
Who did you sell to? That's it. Was it another business that has a GST number, what we call B2B? Or was it just a regular person, a consumer, who doesn't have a GST number, which we call B2C? Getting this right is step one, and honestly, it's the most important step because it decides where most of your numbers are going to go.
So, let's talk about your B2B sales. Let's say you sold 50,000 rupees worth of goods to a wholesaler who's registered for GST. That invoice, it gets reported in the sections under Table 4. Now, the exact letter, 4A, 4B, depends on the specifics, but the main thing to remember is all your standard business-to-business sales land right here. Simple as that.
Now, for your sales to regular customers, things get a little more interesting. There's this special category called B2C Large, and this isn't for any big sale. It's very specific. It's for when you sell to an unregistered customer who's in a different state, and only if that single invoice is over a certain amount. And that magic number is 2.5 lakh rupees. You'll want to remember that one. So if you have an invoice going to another state, to a regular customer, and the value is over 2.5 lakhs, it gets its own special treatment.
For example, imagine you sell a piece of machinery for 3 lakh rupees, and you sell it to an individual, not a company, in another state. Boom! That is a classic B2C large invoice, and it gets reported directly in Table 5.
So you're probably thinking, okay, what about everything else? Well, all your local retail sales, plus any of those interstate sales to consumers that fall under that 2.5 lakh limit, they all get bundled together in one big bucket called B2C Others. For a lot of businesses, especially if you sell online, this is where most of your sales are going to end up.
A perfect example is a simple 5,000 rupee sale to a local customer who just walks into your shop. That transaction, along with all your other smaller consumer sales, gets consolidated and reported together in Table 7.
All right, so we've got the standard B2B and B2C sales sorted. Now let's take a quick look at those transactions that don't quite fit the mold, like when you're selling internationally or dealing with goods that are tax exempt.
This is pretty direct, actually. If you export goods, say a $1,000 shipment to the USA, that has its own special spot in Table 6A. And if you sell items that have zero GST, like fresh milk, you still have to report the value of those sales. You just do that in the various sections of Table 8.
You know, business isn't always a straight line from selling something to getting paid. Sometimes you get returns or you take payments up front. This next section covers how you manage those financial adjustments right there on your dashboard.
So what happens when a customer returns something, or you need to issue a refund? Well, you can't just delete the original invoice. You have to issue an official document called a credit note. This is how you formally adjust that original sale. And of course, these adjustments have to be reported in your GSTR-1.
And hey, just like with your sales, the reporting for returns all depends on who the customer was. A return from a GST-registered business goes into one part of Table 9B. A refund to a regular retail customer, that goes into a different part of the very same table. The system is designed to keep them separate and organized.
Now, handling advance payments might seem a little tricky, but it's really just a 3-step dance. First, when you get the advance payment, you have to declare the tax on that amount in Table 11A. Later, when you finally issue the full invoice, you then go to Table 11B to adjust for the tax you've already paid. It's just a way to make sure you don't pay tax twice on the same transaction. Makes sense, right?
Okay, take a deep breath. We've worked through all the individual types of transactions. Now for the final step, the summary tables. This is where everything gets consolidated and you get that awesome bird's eye view of your sales for the entire month. These final tables are about more than just numbers. They really give you some cool insights. Table 12 is the HSNY's summary, which basically breaks down your sales by product code. It's a great way to see what your best sellers are. Table 13 is a super simple count of all the documents you issued, a good way to track your transaction volume. And finally, tables 14 and 15 are absolutely crucial for online sellers. They detail your sales through platforms like Amazon or Flipkart and show when the platform has paid the GST for you.
Theory is great, but what does this actually look like in the real world? Let's take a look at a summary for a typical business that sells its products online directly to consumers.
This is a fantastic illustration of how it all works. You can see there are entries only in the tables that actually matter to this business. They've got 44 invoices under B2C Others, a record of the documents they issued, and data showing their sales came through 2 e-commerce platforms. Everything else is nil, because it just wasn't applicable.
And here's the key takeaway. A dashboard that looks this simple isn't wrong. In fact, it's perfectly normal. If you're an online seller who focuses on consumers, your final summary might look just like this. And that's exactly how it should be.
So, as we wrap this up, I'll leave you with this one question to think about. After you file, take a moment to really look at your own summary. What story does it tell you? Is it mostly B2B, B2C, or maybe a lot of exports? Your GSTR-1 isn't just a tax form. It's a monthly snapshot of your entire business.